Good morning, it's Ian from Trader Management Company. Just going to talk about dollar yen going into the week 13th of September. And this is our weekly chart. As you can see, very aggressive move lower in the dollar yen pair. What we have got here towards the low, towards the bottom of this wedge formation, we're just starting to get some rejections on these weekly candles. You can just see some shadows, or pins as they're called, just protruding to the downside. But you can see formidable resistance up around sort of 92.40 area, and our indicators here, this shows us bearish engulfing candles, okay, which are very negative for the pairs, and we can see that we keep on getting numerous bearish candles and very few bullish candles in dollar yen. Let's take it to the daily. Okay, again on the daily chart, getting towards this level, this 82.66 level, which is our trend line on the weekly, and again some rejection around this sort of level, this 83.60 area. We're getting a lot of verbal intervention by the Japanese authorities saying that they don't want to see dollar yen go further to the downside. And there was even rumours on, I think it was Wednesday or Thursday last week, that the Bank of Japan was telling its banks to prepare to intervene into the market. That didn't happen, and of course the market then just pushed the prices lower. So here again we can see our EMA is holding the pair down well, spiked up to it on Friday. This is our Sunday bar, which is to be ignored, okay, and then we're getting this move down again this morning. So as far as the weekly and the daily chart is concerned, we've still got a downward bias, but we've got a downward bias with caution. Okay, 4-hour chart, again no gold star. This move up looking corrective, okay, since the 8th of September, and just coming to take a bearish bias again below the EMA. What I would suggest for this pair, while it stays inside this wedge formation, okay, the bias is still to the downside, but if you are taking sell signals in dollar yen, I do it with extreme caution now, because wedge breakouts, when we do break out, can be very aggressive, very impulsive, and can target the beginning of the wedge pretty quickly. And the beginning of the wedge is around 91.52. So like I say, the bias is to the downside, but with extreme caution. What I'm looking for is a breakout now. I want to see this sort of area. First my cloud cover 84.78, then my trend line 84.85, and finally 85 the figure. I want to see that breached to give me the bias to start taking long trades to the upside. Also, one of the reasons why I think this trade is overcooked is I'm looking at euro yen, and that's around 261.8% on the daily chart, which is warning me of at least a correction. Okay, what we probably will get here, when we do get the breakout, is a push up and then a move down to test the trend line, which is quite common on wedge breakouts. Okay, good luck, and I'll speak to you soon.